Hi everyone, welcome to today's trade of the day, and for today's trade of the day we will be looking at the Kiwi dollar. So what I have here is Kiwi dollar on the weekly, and very interestingly last week we ended with a bearish candle. No reversal pattern, but I just want to focus on this area here and show that we are actually holding below a descending trend line resistance, right? One touch, two touch, three touch. Alright, we can expect price to actually make a lower low. Okay, so I'm just going to put the long-term target here, just sort of putting this target here, because if this long-term swing target, if you look to the left, it's really where the graphical overlap support is. And very quickly, let's go down to the 1 hour. Okay, on the 1 hour, the market structure is a lot clearer. Alright, of course the weekly swing target take profit is really a bit too far away, so I just want to focus on this area right now. Right, we see that price is actually making a lower high, right? Lower high, we can actually confirm it with a descending trend line. Not the best descending trend line, but you can see very clearly that price actually made a lower high. We can expect price in line with the weekly chart to actually make a lower low. What's more is that if we actually draw a ascending trend line support, alright, this support was previously broken. Okay, it's a support that has been broken. Price tested, if you change it in close, you can see price tested once, twice, third time. Okay, so it's a breakout, and seems like price is coming back to make a retest before dropping lower. So we can actually use a Fibonacci retracement from the high to the low and open our Fibonacci ratios. Alright, we see the 23.6 right here in the ascending trend line support turn resistance. 38.20 is there, so I really want to use this as sort of an entry zone, right? So this can be a sell entry zone. Remember, again, we are bearish. Okay, so a very nice sell entry zone, okay, between the 38.20 to the 23.6, right? So a bit of a white zone, but of course I want the take profit, right? The first take profit, the intraday take profit, to be at this graphical low here. Okay, it's really in between the negative 27 and negative 61.8, but that is just what I just want to point out, right? Why do I want to point out that level? Okay, let me just show you guys. Okay, I'm going to point out that level, this graphical swing low, as intraday take profit. Okay, very nice risk reward ratio over here. Intraday take profit, why here? Because if you look to the left, you extend it further to the left, okay, this was actually a level which was a resistance turn support, right? And price actually bounced from there. So it is actually a graphical overlap support, so we're going to use this level as a very nice take profit level. Just waiting for price to come up to this area, and then we can go short right here. Last but not least, I'm going to open up the 61.8 as a stop loss. Okay, we all know that 61.8 is a key Fibonacci retracement level, but I'm going to back up my stop loss just slightly above, a couple of pips above, to give my trade room to breathe. Now if price actually breaks above the trend line resistance, takes me out at a stop loss, right, it would have formed a higher low, okay, and this bearish structure would be invalid. Last but not least, right, we can actually look at momentum indicators. We can see, okay, 21 is a bit too sensitive. Let's look at 34. Price is holding very nicely. Okay, when it's on an uptrend above 34, when it's on a downtrend below 34, it also holds very nicely. We are now below the 34 moving average. MACD has just crossed below 0, showing a build up in bearish momentum. So this is the trade of the day. Just want to give you guys my thanks. I'll catch you guys tomorrow. Take care and goodbye.